Hi all, Adam Collingwood here. The screen you're looking at the moment is the top 25 of the FTSE 350 stocks. So these are the biggest climbers and performers of the last 12 months. So what I do is on a weekly basis, I like to know who is doing well and who conversely is doing really bad, and you'll be amazed how people are still holding stocks that are right at the bottom of the rung, and not holding stocks that are doing fantastically well. One of the other things I'm going to cover is sectors. So important to be in the right sector, and I'm going to start here first before I go into the top 25 for this week. Now, what you'll see here is the household goods and home sector. That's pretty much property developers, and we can see how well they're doing at the moment. I mean, you've got three here. Number 18, number 19, number 20, that's Persimmon, Bellway and Crest Nicholson. And at the moment, over the last 12 months, even despite the recent falls, those stocks are up so far, 12 months to date, 56%. So you'd have done very nicely there had you bought into those stocks. And in it, number 7 and number 8, Barratt Developments and Taylor Wimpey. So they are up 75% there since September 2014, and here 74.63%. That's for Taylor Wimpey. Red Rose up there as well, so you can see they're all doing well. I mean, if you had followed any of the stocks in the property development sector, you would really be sat on a very handsome return. One of my favourites in at number 1, and it's continued to just keep performing so well, is in the travel and leisure sector, and that is Betfair. Look at that return, 155%. It's increased by, had you bought the stock on the 2nd of September 2014, that's how much it had gone up by. Even over 3 years, it's gone up by 287%. It's just a great stock to buy, and even with all the volatility recently, Betfair still produced some great results, and their stock just flew up. Good old Greggs is there as well. Greggs continuing to sell to the lower end of the market, I suppose, because although we supposedly are not in a recession anymore, all the pound shops and all the shops that are selling their goods very cheaply, they're just selling loads and loads of them. Obviously high volumes based on low margins, but they're still making serious profits. So you can see that's why Greggs done well. I mean, they're in at number 3. They've gone up over the last 12 months by 104%. Which is a great improvement and a great stock to have been in. Now, you can see even Rightmove have made it into the top 25, going back to the property market. Another one, Real Estate Investment Trust, Unite Group's been in there, and you've got a couple of the financial services companies that have made it there. Now, what we're going to look at is, I'm just going to click on this button here, and we can see what you should not have been holding if you've got any shares, and that is in the oil sector. You've probably seen the oil prices have plummeted massively over the last 12 months, and this is reflected really badly in companies like Tullow Oil, Premier Oil, Shell have done very badly. But you can see the stocks here, such as Premier and Tullow, have fallen by 71%. Just in the last 12 months, they've fallen by over 70% in this oil and gas sector. So that's, in that sector, that's what you don't want to be in. So conversely, the property sector, great, yeah, consumer sector, great, but oil and the mining stocks such as Anglo American, Lonmin, you'll see that gold prices have fallen, and they have been affected as well. I mean, you can see mining, BHP Billiton, Vedanta, Cas Minerals, but guess what? These companies are actually still have been in the FTSE 100. So yeah, if you have a tracker, that doesn't bode very well for you. Those are the kind of stocks that you don't want in there, simply because of the size of them. That's why they were originally in the and certainly BHP Billiton. It's you can see the capitalisation of that company is 22 billion. So they're not a small company, but they have really felt the brunt of falling gold prices. But again, oil, Royal Dutch Shell, Nostrum Oil and Gas. Yeah, all done very badly. So this is the bottom 25 of the top 350 UK stocks. So if you were holding any of these, I feel really sorry for you if you hadn't come out of those, because the value of your investments would have value of those stocks would have really affected you in the pocket there. So going back to our top 25, had you been in any of these stocks, then well done. That's a great performance from these. Even if you just look at over the last 30 days, this just gives you an idea of how well some of these stocks have done. You can see Vedanta actually did make a bit of a recovery in the mining sector, but nowhere near has it recovered to how much it had fallen by. You can also see the rank groups done well over the last 12 months, but over the last 30 days it had gone up by 8.3%. You got so Betfair had gone up by 15%. So these are the ones that you need to be following, because they all do extremely well when they are trending in the right direction. I'll just quickly show you a chart here of Betfair. So let's go into Betfair. Right, okay, so this is Betfair. I'm going to go into, where are we now? So we are in September. So what we want to look at is September of 2014. Yeah, here we are. So 1st of September 2014. The blue line, by the way, is the FTSE 100. So you can see the FTSE 100 has done nothing over that same period of time. So not good news if you had a tracker fund, because the value of your money would be down now. But you can see Betfair have just continued to just rise. I mean, certainly the turn of this year, the share price has just gone up and up and up, and you can see why. It's up over 100%. I mean, 150 odd percent over the last 12 months is an incredible return for anybody who did buy into them. But you did have opportunities to buy in. You could have bought in there, you could have bought in back here, back in October 2014, waited for opportunities for the price to just come back again to within your trend line, and then pounce again. And this, just in this last month, the earnings were released for Betfair, and they were very good, and hence the reason why they've just continued their trend upwards. But one of the things that could happen, certainly, is that some sectors end up getting oversold, and some get overbought. But what you don't want to do is ever go against the trend. Never go against the trend. Trend's your friend until the bend in the end. It's a well-known saying, that, but it's very true. You don't want to go against that trend. There will be opportunities to buy back in eventually into the mining, gold mining sector and oil, but you've got to bide your time. Once you can see the markets are far more bullish in that particular sector, then it starts to become safer to buy in, but never go against that trend until you see things turning. So you can see at the moment, the companies like in the property sector, it comes up under household goods, but it's literally property developers. Even companies like Travis Perkins is doing well. Ted Baker, Supergroup have done well in the retail industry. A couple of the healthcare companies have done well as well, but it's mainly be about property and all the personal goods sector that has done extremely well, and those are the sectors to focus on whilst they continue to keep trending in the right direction. So this is the benefit of actually buying individual stocks. I mean, had you bought into any of these companies, and let's just go down. So you've got 25. I'm just going to show you over the last 12 months how many are up. There we are. So there's 199 over the last 12 months that are actually showing a positive return compared to the FTSE 100, which is showing a negative return. So it just gives you an idea of how beneficial it can be to buy individual stocks. And there is a way, there is a methodology of how you can buy these stocks that you're looking at the moment. This 25 here, there is a way, there is a system that I use, I created, that I just can pick up these stocks all the time because they are trending well. And when a stock is trending, then you can continue to buy it. Don't buy into the fallacy that just because something is already gone up by quite a bit, that it hasn't got further to go. I mean, you can just look at this one here. This is Taylor Wimpey. I mean, over the last, this is where the performance over the last 5 years. Had you bought that stock 5 years ago, so 2nd of September 2010, then you'd be up 596%. So had you put in, I don't know, £10,000, I think you'd be very, very pleased with almost getting a six-fold return on that period, and you can still see that over 12 months it's continued to go up. So you could have said, oh well, it's already gone up by so much, it can't continue to do that. Well, yes, it can. It's proved that here, as you can see, up 12 months, over the last 12 months by almost 75%, but over 5 years by 596%. So that's what I'm talking about, a trending stock. Here's another one, Ted Baker, at 472% over 5 years. This one here, Persimmon, at 431%. Barrett Development's the same, but you can see even JD Sports has done well over that period of time, over even the last 3 years at 424%. So you could have been in any one of those stocks. I mean, let's just have a look at the last 5 years here. The number one was Ashtead, that had gone up by over 1,000% since 2nd of September 2010, so just over 5 years. And even Howdens, if you're into refurbing places, I mean, Howdens have done extremely well in the industrial sector, 623%. So we get our bathrooms and kitchens from 623%. That's up by even just here. You can look at ITV's been doing well, up 314% over the last 5 years. So they've done exceedingly well, and I'm just going to show you over that 5-year period how many were up. I mean, so almost actually, yeah, 249 positive returns from those stocks. Compare that over the last 5 years to the FTSE 100. You'll see a huge disparity between the return of a tracker, FTSE 100, and what you could get by buying individual stocks. Please don't buy into the BS about the fact that buying individual stocks is a high risk thing to do. It's rubbish. It's just all about how much you commit from the funds that you have available that determines how much that risk is. There are a lot of people in the industry that would rather you just bought a bundle of stocks all put together in a fund or a tracker or something because it suits them too, and they can sell you those funds and make money off you. If you do it yourself, buying individual stocks, knowing when to buy individual stocks, you can do really well out of this. If you've got pension funds, ISAs, you can do it with those, or just individual stocks you can buy into. And there is a way to do it. There's a methodology which I teach people of when to buy stocks, and also for those of you who do want, and I'll just go back to short selling, if you wanted to short sell companies like Tullow, like Anglo American, any one of these that has fallen, you could have short sold those particular companies. So you wouldn't want to have held those stocks, but what you could have done is you could have short sold them. There are various ways that you can take full advantage of that, and that's something else that I teach people. How to do that. So hope you enjoyed this. This is a weekly video that I will be sending out, and the purpose behind this is just to give you a flavour of what's fantastic stocks there are out there. Next week I'll probably do the US 500. I'll dip in to let you know how the top 350 UK stocks are doing, but I will also delve into the US 500, which you can see up here, and we'll also have a look at the Nasdaq 100. But not only that, you will see me talking about new highs and new lows here, and how I organise those so that I can see opportunities all the time, how I can spot those opportunities and not miss out on of the stocks making brand new highs or stocks making new lows. But they are great entry points to get in and to get onto your watch list. Stocks that are making new highs and new lows, and over different time frames. So some over last 250 days, and one's making new highs over the last 3 months. So look out for all that as well. Hope you enjoyed this video. More to come, and you just, if you're buying stocks and you are just buying them based on some stock recommendation from Investors Chronicle or some of these magazines, just be very careful. Some journalists are paid to beef up certain stocks, whether let's say that they weren't. You can bet that they do. It's in their interest to talk up certain stocks that aren't doing too well. But you can always look at your own broker buy list anyway. There is something I look at here, which you can see the broker consensus, and then I can look at how many brokers are in favour of a particular stock, where they consider that they are a strong buy or a continuous sell. So you can see just down here there's a sell on Echo still, but some of these ones, they've now got buys on there. I'm still a bit dubious about that. I'd still like to wait to see a recovery happening there. Right, okay, so look out for more videos. If you want to subscribe to the Financial Traders TV channel, please do so. If you'd like to email me, please do so at adam@learnhowtotradeshares.com. That's adam@learnhowtotradeshares.com. Okay, you take care now, and speak again soon.